రైట్ ఆర్బీఐ గవర్నర్ మాట్లాడుతున్నారు ఇప్పుడు లైవ్ చూద్దాం.
On the demand side, private consumption, which is the mainstay of aggregate demand, about 56% of the total GDP, remains healthy with a gradual rise in discretionary spending. Rural demand remains steady while urban demand is improving. Investment activity is reviving as reflected by high frequency indicators that we track. Merchandise exports recorded a strong growth in April 2025. Of course, this could be because of some front loading, but this is after a lackluster performance in the recent past. Non-oil, non-gold imports posted a double-digit growth, reflecting buoyant domestic demand conditions. Services exports continue on a very strong growth trajectory. Both the last month's figures have been quite robust. Going forward, the outlook for agriculture sector and rural demand is expected to receive further impetus by the expected above normal southwest monsoon rainfall. On the other hand, sustained buoyancy in services activity should nurture revival in urban consumption. The healthy balance sheets of banks and corporates, governments the government's continued thrust on capex, elevated capacity utilization, improving business optimism, and easing of financial conditions should help further revive investment activity. Trade policy uncertainty, however, continues to weigh on merchandise exports prospects. The conclusion of the free trade agreement with the United Kingdom and the fast progress that is being made in our negotiations with other countries, on the other hand, should provide a fillip to trade. Spillovers emanating from protracted geopolitical tensions and global trade and weather-related uncertainties pose downside risks to growth. Taking all these factors into consideration, real GDP growth rate for this year 25-26 is projected at 6.5%. We continue with our earlier forecast with Q1 at 6.5, Q2 at 6.7, Q3 at 6.6, and Q4 at 6.3%. The risks are evenly balanced. I will now move to inflation. CPI headline inflation continued its declining trajectory in both March and April. The headline inflation moderated to a nearly 6-year low, in fact 69 months to be precise, to 3.2% in April 2025. This was led mainly by food inflation, which recorded the 6th consecutive monthly decline. Fuel group, which had been earlier witnessing deflationary conditions, there was a reversal of the deflationary conditions, and it has recorded positive inflation prints in the last 2 months of March and April. This is partly because of the hike in LPG prices. Core inflation remained largely steady and contained during March and April, and this is despite the increase in gold prices, which exerted an upward pressure. The outlook for inflation provides towards benign prices across major constituents. The record wheat production and higher production of key pulses in the Rabi crop season should ensure adequate supply of key food items. Going forward, the likely above normal monsoon, along with its early onset, augurs well for Kharif crop prospects. Reflecting this, inflation expectations are showing a moderating trend, and this is more so for the rural households. Most projections point towards continued moderation in prices of key commodities. This includes crude oil, which is of critical significance to us. Notwithstanding these favorable prognoses, we need to remain watchful of weather-related uncertainties and the still evolving tariff-related concerns with their attendant impact on global commodity prices. Taking all these factors into consideration and assuming a normal monsoon, CPI inflation for the financial year 25-26 is now projected at 3.7%, as I mentioned earlier. This is a downward revision from our earlier forecast of 4%. We are projecting inflation for Q1 at 2.9%, Q2 at 3.4%, Q3 at 3.9%, and Q4 at 4.4%. The risks are evenly balanced. I'll now come to the external sector. With a moderation in trade deficit in Q4 24-25, alongside strong services exports and remittance receipts, the current account deficit for last year 24-25 is expected to remain low. We are yet to get the final figures. Furthermore, despite rising geopolitical